Back another beautiful trade on the same single day. We had 500 pips. On the Tokyo session, we had another great 400 pips, right? So it was a beautiful one. You know, I am proud of this specific day because we took two beautiful swing trade, and that was so basically we had three trade on the same week. So we had Thursday morning, Thursday night, and Friday one last try, which was a break even, no losses, but it was a beautiful one. You know, we literally called the top of here, so 3,347. I called it. I said they're gonna go all the way back up here, but the problem is that they had some leakage. The algos were pretty sophisticated, and I didn't want to lose my time for like few pips when we did 900 pips. So no risking, you know, my own capital. We're currently back at 185, 300. You know, we have to take it slowly but surely. We have to stay within the realm of what we can and what we can't. And what we can is to have beautiful swing of lots of risk to reward. The first one was here. The second one was here. I said to our group, the war room, this will be a bit more riskier than the first one. And I'll explain to you guys why exactly. If you're not aware, we have a war room where we're sharing the best trade that we have during the week. We also like literally on the moment, so you can take the trade if you desire. We have our perspective. We have the Sunday analysis breaking down like what happened and what's going to likely happen for the next week upcoming. We also have the psychology. We have a book club and many other good stuff. So if it's on you, if you want to watch it, go on it. And this is where you could see excellence coming up and rising on the top. All right. Now, the second trade was beautiful. The first one too. The second trade was a little bit less. You know, I find this one a bit more dangerous because I knew for a fact that this will be a lot riskier for lots of reasons. If you guys recall, this is the first beautiful descent that we had. And I'll give you an example how this was not easy for everyone, but for us, yes. To take into consideration also that on Wednesday we had Powell that did a speech, so we had a low momentum finally go back up, which is okay. Going up was the actual narrative, but first time that he said uncertainty, the American economy is very uncertain. We had seen thousands of pips on the bullish side, so this is okay. This is normal, but it was odd. Coming from down below here, the price was 3,366. Pretty odd. I didn't like the price. Not only this, we've already started to sell off a lot of positioning from 3,500-ish around the 6th of May. So we're also in a narrative where AOs want to sell off, but the fundamental is pushing on the upside. And I've always said it to my group that when the fundamental is not colliding with the technical, yeah, my drawing skills are pretty awful with this Apple mouse, but anyway, you get my point. So fundamental and technical, when they're not aligned together, this is where we perform the best because we're prone to negativity. Okay, us humans, we love negative news. The reason is because that's our human nature. And look at all the media. When was the last time you saw a positive news? It's all about negative news. It's all about negative stuff. And we like that our eyeball gets directly, you know, into these things. Our reticular activin system are pretty much aligned with negativity. So, and trading is a bit the same thing. They go and push very aggressively, which we saw. Right before London session, we pushed around another 900 pips, which is pretty crazy if you may ask me. Now, a lot of trader would assume that it's gonna maybe go back up. So the specific fib they used is this one to fake everyone. Not every retail trader used this fib because they're gonna assume this is the right one. But that's a different discussion. There's a different video. Those that have experience will use this one, and for those that have the experience, you know, they get burned with the perspective of thinking that it might go up, touch the 23%, right? Remember, when they touch the 23%, this is usually a place where there's a lot of excitement. So we thought that this would go all the way back up, but the reality is, you know, the fundamental is pointing upward. Technical is now pointing upward, but they pushed on the downside. Why? Very simple. Profit taking. It's time to take some profit in their portfolio. This is what it is, and this is what we've seen. Now, keeping the same Fibonacci, we're going to extend this one. And this is what they've used on the downside as well, the same take profit. So around this area was the last take profit area for Thursday Tokyo session. And so I had those sequences on one of my chart, which I was aware that this would be probably the last take profit area. I said to the group, just to make sure, to be safe, we're all going to exit at 75, like literally right there, just to make sure that we're all safe. And it's not just this fib. You could plot different fibs, different scenarios, different storyline, and then you're gonna have a better assessment. But this is literally the fib that they have used. Another reason why it was risky, it's because we're getting close to the weekend, and during the weekend, having Trump as a president, when he says one comment, when he changes perspective from one side to the other side to make America great again, you do not want to leave your trade either open on the weekend or nonetheless on a sell or buy, because you just never know what's going to happen during the weekend, which I'm going to come back later on. Okay. But if we look at technical side here, so we're going to go on 1 hour. And if we see this specific wick here, we're going to plot this from here to the end of the wick, and beautiful support zone here. So there was a lot of sell off and buy limit that was right there, and you could just see by the aggressiveness of the candlestick that indeed we did had lots of buy limits. So this was also in my mind, that specific candlestick that previously we used it to sell off aggressively. That was at the end of the month, if I remember, it was the 30th of April. Okay, so this specific price, there is a lot of probability to go all the way back down toward the 50%. I mean, the $3,250. Okay, so this was right there. And we also had different confluences that were pretty aligned with this specific price. We were open to it, but I said, best price is to get out here. If you guys want to go all the way back down, on your risk, which few of my account, I were more aggressive. I told myself I'm going to go for that big swing, and it did not happen. So if we go back on the 15 minutes, I pretty much take out my profit around here and some around here. Okay. One of our members wrote us during that time. He said, is that normal that that's what we call that retracement? I said, absolutely not. It's not normal. I would be you guys. I would get out of this trade. Even if you're here, it's best. And usually when trader have FOMO, greed, it pisses off that you had 400 pips, didn't took any of your take profit, at least some partial, and then it goes all the way back up. What happened is that in our human biases, we like to keep that trade and hope for it to go all the way back down. And usually that's not the case. If they went back up toward that positioning, they might just going to break that stop loss and also make you lose a lot of capital. So you have to stay stoic. You have to understand this is the part of the game. You need to understand all those small nuances. But I just gave you guys two specific reasons why it was risky. And the last but not least, I just said it was close to the weekend, and you don't want to hold your position. Even if you'd be a big investor, AOs, you don't want to leave your position open during the weekend. And on weekend, we saw that India and Pakistan ceasefire. Being Trump, I would go back to Russia to stop this. Negotiations are starting to happening, and more importantly, China and US are starting to see the end of the tunnel. They're starting to see the light. The tariff are being negotiated a lot better than what we've seen previously. So all this happened during the weekend. Once it opened on Sunday, we saw a huge gap. So if you go on your broker, you might see that gap, but it was pretty explosive. So yeah, beautiful trade this past week. And I'm not going to lie to you guys, we're currently Tuesday, and I have a hard time not taking any trade. I haven't took a single trade yet since Sunday. I mean, last Friday. It's pretty hard. I'm not going to lie to you. It's pretty hard because I have the personality of fighting, getting the championship and being active and to always being into the action. But, Warren Buffett and Charlie Munger said it best. You don't make money by buying and selling. You make money by sitting on your ass. So I'm practicing those virtues in trading because it's important. So what got you there will not necessarily going to bring you where you want to be, and you have to do certain changes. Two things are certain in this life: death and change. All right, hopefully you liked the video. Don't forget to like, subscribe, comment. I see you guys on the next one. Cheers, God bless you all, and make a lot of pips.